What's up, guys? Welcome back to my channel. This is Dr. Martin. If you are new to this channel, please do me a favor and to click on the subscribe button. If you obviously are a returning subscriber, thank you so much for coming back. And if you are new to this channel, make sure that it doesn't end before you click the subscribe button, and also to let me know by the end of the video what you do think about today's video. And do make me a favor, or rather do me a favor and do like this video. So in today's video, we're talking about the 5 elements which I do think that will basically increase and escalate your trading and take it to the next level. So this is like something I want to talk about today. So before we get onto that, today's video is basically sponsored by Hanko Trade. And if you do want to trade with Hanko Trade, we do have bonuses that we do offer. As you can see on the screen right now, there's like a rescue bonus, there's a 100% bonus, which obviously starts at $100. And do obviously click on the link on my bio after that to go through the terms and conditions of the bonus that they do offer. Now, going to today's topic, we do have the very first thing that I do want to talk about, which would basically do help you. So basically, this is an advice that's coming from a person that's been trading for the past 5 years, and I have been blessed and privileged enough to see massive profits and gains from my trading. And these are the things that I have seen to have worked for me in the past couple of years that I have been trading for. So the first one that I want to obviously talk about is your entry price. So this is gonna obviously impact and influence your trading in a great way, that you need to put it down in your trading journal. So the first thing that I want you to obviously look at is the entry price. This is a big factor on your trading, that you do not want to enter at random spots and random places when you are trading. The entry price is as important as the exit price. So you really need to basically discover where exactly are you going to be coming into your trade. Are you going to be entering at this specific area and level that you have actually set up for yourself? Because I know a lot of people who would obviously want to randomly come into the markets even before the market gets to their specific levels of trading. So you do need to obviously consider that you need to check the entry price in which you are coming from. In my perspective, I would say on a buying market, you need to obviously look at the support levels for your entries, and on a selling market, you need to look at the resistance levels for sells. And if you are obviously a trend line trader, even trend lines do have resistant trend lines and supporting trend lines, and these are levels and areas that you want to enter from. And if the market is not at a level and a price that you have obviously initially planned on entering, that wouldn't be a trade that you obviously have to take. So you really need to take it as a loss and move on and look for a next trade that you are obviously going to be entering. And the second point that I want to talk about is a target price. So you need to have a target price when you are trading. You don't want to be trading and not knowing where to exit, because a lot of people do know exactly where to enter but don't know where to exit, and that kind of makes their trading inconsistent, because then you'd find that on trades that were really meant to make them big money, they end up closing early or extremely late. The market will get to a level that they had anticipated to exit, and the market will go back into the initial entry price, and you find that they did not even exit the market when the market got to their target prices. So you need to obviously consider looking at target prices for exits, and those would really help and increase your trading and take it to the next level. So your entry price is as important as your exit price. If you know when to enter, you need to know when to exit as well. And the third one would obviously be stop loss placements. A lot of people don't necessarily know how to place stops, and you find that you do know where to enter and where to exit, but you don't know where to put your stops, and that would really affect now you're trading in a negative way, because obviously you would enter here, the market comes, hits your stop, and then obviously continues towards the direction of your trade. And that happens quite a lot to beginner traders, that they do not know where to place their stop losses properly. So in my perspective and regard, I would say do understand where your proper stop placement would be. So on a buying market, this is a free one that I'm giving you. On a buying market, you always want to make sure that you put your stops below the previous swing low, because obviously once the market comes and breaks the previous swing low, then the structure would be violated. And on a selling market, the previous swing high would be a proper stop loss placement region, because if the market goes and breaks past that level, then the trade is entirely invalidated. So that's the third point that I would obviously give to you. And the fourth factor, which would be now the most important pointer, because now you would have all the 3 points, but if you don't have this one, then obviously you will still see back and forth kind of moves in your trading, which really is frustrating at times, that you do know when to enter, you do know when to exit, but you keep on blowing accounts. And this would be the reason behind that specific element. And the fourth one would be risk management. So in any kind of business or in any space that you want to put investment in, you do understand that there is the nitty-gritties behind the risk management of whatever funds that you do put in. So if you do want to obviously be a successful entrepreneur or like a successful trader, you really need to consider the element of risk management, that where are you entering, how are you entering, and how much are you willing to lose and risk on that specific trade, and that will then determine whether you become a profitable trader or not. So risk management plays a huge part in your trading, that you need to really consider, risking accordingly. So this would be a biggest factor of these 4 points that I just gave you, that you really need to now calculate properly how much you are risking on that specific account. I'll give you guys an example. So if you are funding $100, which I did cover even as we started, that Henko trade does give you $100 100% deposit bonus on a minimum of $100 deposit. So if you do deposit $100, you do know that you do have the margin of $100. And if you take up a position that has a 10 pip stop loss, you need to calculate the lot size then according to the stop loss placement that you would have understood, obviously, from the points that I have given you. And if the stop loss is 10 pips and you're risking with the 0.10, then you do know that if the stop gets hit, or rather the positions get taken out, then you are losing $10 on that specific trade, which would then mean you're still left with $90. And you can also do the maths from there. If you want to risk $20, you can risk a 0.20, and if your stop loss is 10 pips, you're losing $20. And if your target is a 100 pip target, then you're making $200 on that specific target. It's really easy to make money when you do put the element of risk management into place, because then that helps you now understand exactly how much you are losing on a trade before you even open the position, and how much you are willing to make even before you open the position. So that becomes now a big part of your trading plan that you need to consider as you are obviously on your quest of becoming a profitable trader. And the last one that I would want to give you guys is obviously trading time frames. So the time frame in which you are trading will determine the amount of risk and reward that you are obviously going to have in the market. So a lot of people don't really understand time frames. There's people that obviously analyze on the M1 and go up to the H4, and they'll be confused on the very fact that the two different time frames are giving them two different datas and two different information. And that's pretty normal, because on the M1 you've got too much noise and too much volume that's happening on the lower time frames, because the market is literally moving every single minute. But on a 4-hour time frame, the market will be moving every single 4 hours. So you need to understand time frames as you are trying to trade. And the minute you understand time frames, that will basically help you take the right kind of positions as you are obviously working your way towards profitability and consistency. For me, it's not even about making big amounts, but obviously making profitable and consistent gains as you are obviously trading. So these are like the 5 points that really would be like game changers for me, and that really helped me in my past 5 years of trading. So because I've been trading for 5 years, I'm giving you 5 points. So yeah, but anyways, these are the 5 things that I want you guys to consider as you are trading. Make sure you do put them down on your trading plans. Make sure that these do become a part of your trading plan as you are trading. And once again, as I did say on our previous videos, that the broker that you trade with also does have an impact and influence on how you will be trading. You don't need a broker that will close all your positions if your positions go on a negative drawdown, but you need a broker that's obviously going to save and help you as you are trading. And that will be Henko Trade that we are recommending for the year. So do make sure that you go to the description box and do click on the link that's on my description, and do make sure that you obviously follow the 5 steps that I just gave you. And if you are new to this channel, do let me know what you thought about today's video. If you think I'm a cool guy, do subscribe on this channel and you'll see more of this content. And once again, this is Dr. Martin, and we're signing out. Peace out.